and how we have MedPlus buzzing with a fair amount of volumes. Actually, the stock has corrected about 33% from its highs already, but we have seen some bit of recovery on that one. MedPlus is buzzing with a fair amount of volumes as we speak at the high point of trade with a gain of 8% odd. The other stock which is also surging is ICICI Prudential Life. After it's got a new boss, Anup Bagchi gets appointed. Yash is here with me in the newsroom. Yash, what's so special about Anup Bagchi?
So, Mangalab, interestingly, when the incumbent MD CEO NS Kannan was appointed at ICICI Prudential Life, he was also the executive director at ICICI Bank, and similar is the case with Anup Bagchi. Of course, the company today has announced that Anup Bagchi will be the next MD and CEO at ICICI Prudential Life Insurance. He'll be taking over on June 19, 2023. June 18th, a day prior, is when the current MD and CEO sort of superannuates his term at ICICI Prudential Life Insurance. Interestingly, the stock is pretty excited with this particular appointment, and there's of course a very important reason to it. Anup Bagchi, in his career since he joined ICICI Bank in 1992, has sort of worked and played a very important role in almost every segment of financial services. He has a management degree from IIM Bangalore, an engineering degree from IIT Kanpur, and if you look at his work, he's worked in retail banking, treasury, investment banking, small scale industry, payment and settlement bank, wealth management business, practically every segment of financial services industry. And this is exactly what ICICI Prudential would need at this point of time when there are so many headwinds ahead of it as far as the regulatory environment itself is concerned. Let's look at some of these headwinds importantly which will be ahead of Anup Bagchi. Budget announcement on taxing large ticket insurance policies. So of course, growing in that environment, getting chunky premium will be a big challenge. Steering the company through all the regulatory changes which IRDAI has announced, potential entry into the health insurance market once composite license gets approved, that will be keenly watched. If you look at the stock has been flat starting from June 2018 till today, which means the entire tenure of NS Kannan as MD and CEO. High which was made on the stock was about 724. The low was 226 during the COVID time. As far as valuation is concerned, it's one of the cheapest stocks as far as the insurance sector is concerned, trading at 1.4 times FY24 price to embedded value. Compare this to something like an HDFC Life trading at 2.3 times and SBI Life trading at about 2 times FY24 price to embedded value.
All right, got that, Yash. Thank you very much for the details on that one. Well, let's take this conversation forward. We have Deven Choksey of KRChoksey now joining in. Deven, good afternoon. Good to have you on the show. Since we're on the subject, what are your thoughts on some of these insurance plays and maybe IPru? If you've had a look at the company recently, if you could share your thoughts.
Yeah, good afternoon, Surabhi. Well, I think a couple of thoughts straight away. Insurance industry, life insurance industry in particular, after the budgetary changes, is going to see a new product launch coming in, wherein I think the saving linked business and the plans would probably give way to the term insurance, the life risk plans. And that is where I think most of the companies will have to rejig their product portfolio. While rejigging the product portfolio, two important aspects to be looked into. One, how effectively you basically rejig the term life insurance plan into a digital format. Because should you term insurance plans, I think they are largely, I think, a voluminous business, and I think where the margins are relatively tight. So in such situation, I think if you distribute it, I think digitally well, then in such case, I think the profit margin remains intact. So that is one point, I think, which is a challenge for the industry. And I'm sure, I think, through ICICI also, I think, would have the similar challenge to look into. The other aspect, I think, where probably, I think, one will have to look at in this business is the valuation. Fortunately, I think the corrected prices in the market has brought down the embedded value. And I think as a result, embedded value valuation, I think as a result of which, I guess, I think most of these companies are no more expensive as they used to be earlier. So that makes, I think, life relatively more easy. But I think in next 3-6 months, we'll have to see how the new product launches takes place and how exactly the companies are positioning themselves into this space.
All right, Deven, just hang in there. We'll get your thoughts on a bunch of other stocks which are moving around as well. But one of them is Zee, which is at closer to the higher end of today's trading session. And this after we got reports that the company has actually gone ahead and settled with IndusInd Bank by paying them. This is important primarily because over the last few days, if you see, they have gone ahead and made settlements as well. One of them, of course, was with the Performance Rights Institution Society as well, over 100 odd crores, 211 odd crores there. This is in line with the company's timeline as well. March 31st is when they have the NCLT meeting to discuss the merger with Sony, and before that, on March 29th itself, we have the NCLAT meeting on the order that was passed, against the NCLT when IndusInd Bank took them to the Insolvency and Bankruptcy Code. However, that becomes a non-event provided IndusInd Bank has been paid off by Zee. But the big point is that it paves the way for a merger, and once that happens, we see value unlocking. I mean, brokerage reports cite the value of Zee to be around 16 times one-year forward earnings at the base case. They've accounted for the delay in merger. They've accounted for lower ad revenue growth as well, given the macro uncertainty. Given all these things, the stock at around 15, 16 times for the largest media company in the country. Do you think this warrants another look after the underperformance? Because it's been flattering to deceive for multiple times in the past. Is this the real thing?
Well, I would think that, yes, I think the valuations have come down. So the downside risk in the particular business, I think, has definitely come down. And as you were highlighting, the merger is the key. The merger would probably build further amount of valuation possibilities going forward, because largely the sports events, I think, which would possibly take the shape out of this particular merger largely, which I would think that I think would result into better profits and profitability for the merged entity. So from that perspective, I totally I totally agree with that point of view that the corrected prices are probably better as far as entry into this particular business is concerned, and the downside risk is limited, literally limited at this point of time.
No, 60 points, by the way. This is a battle going on. Who'll the bounce sustain, or it'll get sold into like it has now for the last 3 days. Deven, any thoughts very near term? Will we hit 16,850, which is the low today, and then we are having a little bit of a up moment. Will this last? And if you were trading, would you buy? I know you're not, but what's your sense, given the magnitude of the fall?
I think the fall has been quite sharp, and the valuations in respective counters have been quite attractive than what they were before. And without too many fundamental changes happening into the outlook of the businesses in most of the listed company space, including some of the larger ones which have got punished because of the exit of some of the traded funds from the India market. As a result of which, I think these valuations have become attractive. In my viewpoint, I think any fall in this valuation is definitely, I think, a good buy opportunity. Even at corrected falls currently, I guess I think the valuations are attractive. So maybe selectively one can start buying into, with the fact that I think another 1 or 2, the pain may be left, because I think some of the funds who may have started exiting, they may complete the process of exiting in the next 1 or 2 months. I think that is an expectation. And on the other side, I think if the market starts getting some amount of support, then probably I think the long traders who are stuck with their position, they may also come and sell their position at a relatively better market eventually. So these 1 or 2 months are likely to be, I think, the opportunity months as far as investors are concerned. For them, I think this time should be better to buy into some of the quality stocks.
All right, Deven, got that. Stay on. We'll have more questions for you on the other side. We do have to take a very quick break. On the other side, we'll also discuss some of the portfolio calls with our alpha manager of the day, Rupesh Patel of Nippon India Mutual Fund will join in.